Well, now it will be recorded. So total asset turnover is 0.85. Do you understand? It's 0.85. This is the total asset turnover of company A. Okay. Now, and this is the total asset turnover of the year 2020. 2020, let's say. 2020 is 2020, 2021, and we are talking about total asset turnover. Okay, so total asset turnover of company A is 0.85. So if we collect the data of 2021 and 2022 also, and if we calculate the total asset turnover, let's say we get 0.92 and then 0.98. So you can see over time, the total asset turnover of company A is decreasing or increasing? Increasing. And we know that the higher the total asset turnover, the better. Right or wrong? Okay. The higher the total asset turnover, the better it is. Okay. So this type of comparison is called time series analysis. Time series analysis. This is called time series analysis. Okay. Oh. অ্যাসেট টার্নওভার রেশিও আমরা পরে ডিসকাস করব। আপাতত এটুকু জানলে হবে যে অ্যাসেট টার্নওভার রেশিও মানে হচ্ছে অ্যাসেটের তুলনায় সেলস কত, এটা ঠিক আছে। আমরা রেশিওগুলো পরে ডিসকাস করব। সো টাইম সিরিজ অ্যানালিসিস ইজ দ্য ইভালুয়েশন অফ দ্য ফার্মস financial performance over time using financial ratio analysis. So if you analyze, if you compare over time whether it is improving or not, no, if the higher ratio is better, then you will say that if it is increasing over time, then it is improving. If it is increasing over time, then it is improving. But some ratios, for some ratios, it is better to have lower value. So in that case, if you see that it is decreasing over time, then you will say that it is improving. So you have to know which ratio should be higher and which ratio should be lower. In most of the cases, the ratio should be higher, for performing better. Okay, another type of comparison is actually cross-sectional analysis. So what is cross-sectional analysis? Let's say we also have found the data of a competitor, okay, which is company X. Which is company X. Company X is the competitor or benchmark. So company X has the total asset turnover of 0.62 in year 2020, then 0.50 in year 2021, and 0.45 in year 2022. Okay, now if you compare the ratio of company A and company X in the same year, then we call it cross-sectional analysis. So cross-sectional, in case of cross-sectional analysis, you do not go over time. You do not go over time. Year to year comparison আমরা করি না। Year to year comparison করলে সেটার নাম কি? তার নাম হচ্ছে টাইম সিরিজ অ্যানালিসিস। আর একই ইয়ারকে ফিক্স রেখে আমরা যদি একটা কোম্পানির সাথে আরেকটা কোম্পানি, অথবা একটা কোম্পানির সাথে কয়েকটা কোম্পানি, অথবা একটা কোম্পানির সাথে ইন্ডাস্ট্রি এভারেজ মানে হচ্ছে এভারেজ অফ দ্য রেশিও অফ অল কোম্পানিজ ইন দ্য ইন্ডাস্ট্রিতে যে কোম্পানিগুলো আছে, যেমন সিমেন্ট ইন্ডাস্ট্রিতে কি কয়েকটা কোম্পানি আছে, তাহলে সেই কোম্পানিগুলোর যদি আমরা রেশিও ক্যালকুলেট করে এভারেজ করি, তাহলে সেটাকে আমরা বলবো ইন্ডাস্ট্রি এভারেজ। তো ইন্ডাস্ট্রি এভারেজ অনেক সময় কি ভালো একটা বেঞ্চমার্ক, কারণ এখানে অনেকের বেশি আছে, অনেকের কম আছে, সবকিছু এভারেজ আউট হয়ে আমরা যে এভারেজটা পাই সেটাই হচ্ছে আমাদের, সেটা একটা ভালো বেঞ্চমার্ক হতে পারে যে ওভারঅল ইন্ডাস্ট্রির তুলনায় আমরা কেমন। ঠিক আছে, তো নট নেসেসারিলি ইউ উইল হ্যাভ টু কম্পেয়ার উইথ দ্য ইন্ডাস্ট্রি, ইউ ক্যান অলসো কম্পেয়ার উইথ হোয়াট, another company, another good company, perhaps you want to follow, the company that you want to follow. So if you do this comparison at a fixed point of time, that means if you compare with another company or the industry average in the same year, then you can call it cross-sectional analysis. Do you understand? Okay? আমরা কিন্তু মোবাইল ফোন ইউজ করব না, সেজন্য আমি এত কাণ্ড করলাম। কেউ কিন্তু ইউজ করছে, আমি নাম বলছি না এখনো। আচ্ছা, ঠিক আছে, তাহলে আমরা so we can see that if you compare across the companies or with the industry at the same point of time, then we call it what? Cross-sectional analysis. And if we compare over time, then we call it time series analysis. Sometimes it may be useful to do both together. For example, you are comparing the ratio total asset turnover of 2020 with the benchmark of 2020, and you are also looking into the trend of your company versus the trend of the benchmark company. For example, your trend is increasing, but the trend of your benchmark is decreasing. So what you are doing, you are comparing both over time and across the company. দুটো একসঙ্গে, তাহলে এটাকে আমরা কি বলবো? We call it combined analysis. Do you understand? We call it combined analysis. Very easy actually. If you look at the screen, we have an example. The financial ratios for select firms and their industry average values. Can you see? Okay. So you can see how many companies? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 companies. The ratios, different ratios of 13 companies are here. Even total asset turnover is also here. So if you look at the first industry, and this is the industry, building materials. Can you see or not? The building materials. So Builders First Source, Home Depot, and Lowe's. These three are in the building materials industry. So what they have done, they have calculated the average industry average ratio. So industry average is not actually the ratio, not actually the average of these three. There are many other building materials company. So if you don't be confused, you will see that the average building materials average current ratio is 1.6, but actually the average of these three is not 1.6. Why? Because that is actually the average of many other companies, all the companies in the building materials industry perhaps. Okay, so what we can do, we can compare the current ratio of Home Depot with building materials industry average and say that, well, because current ratio should be very close to industry average and the current ratio of building materials industry is 1.6, but our ratio is 1.1, we should try to increase it. We should try to be closer to the building materials industry. And if you think about the total asset turnover, the Home Depot has total asset turnover of 2.3, right? But building materials industry on an average has total asset turnover 7.6. So the total asset turnover of Home Depot is far below the industry average, which indicates that Home Depot should try to utilize its assets in a better way, in a more efficient way. Okay, so this is how you can do the cross-sectional analysis. Okay, on this table you can see cross-sectional analysis because all these ratios are calculated at the same point of time. Do you see any year here? No year. So because all the ratios are calculated at the same point of time. Okay, so this is the cross-sectional analysis. For doing cross-sectional and time series analysis, it is very useful to draw graphs. You know, the basic graph, drawing basic graph is not very difficult. Just years should be on the x-axis, the horizontal axis, and the ratio value should be on the vertical axis. Okay, I don't think that I have to show that. Okay, now we are going to discuss about different types of ratios. What are the different types of ratios? We can classify the ratios into different types. Number one is liquidity ratio. Number one is liquidity ratio. So what is liquidity ratio? The ratios that indicate ratios that help us to conclude about the liquidity condition of the company. So these are called liquidity ratios. Under liquidity ratio, we have current ratio, we have quick ratio, and we can have some other ratios as well. But in this course, we are not going to cover so many ratios. Only the selected and very commonly used ratios will be covered. Do you understand? Okay, second category is activity ratio. Total asset turnover is under activity ratio. So activity ratio actually measures the speed with which various accounts convert into sales or cash. That means how efficiently you can utilize different types of assets. Different types of assets. So what are the different types of assets? For example, fixed asset, different types of fixed asset. The current assets like accounts receivable, inventory, and not only that, accounts payable, liability. That is also subject to better management. So activity ratio will help you to identify whether you are utilizing different assets and liabilities in a proper manner, in an efficient manner. So what are the different names of the ratios under this category that we are going to cover? Inventory turnover ratio, average age of inventory. Then accounts receivable turnover ratio, average collection period. Then accounts payable turnover ratio, then average payment period. Then total asset turnover. Okay, these are the activity ratios that we are going to cover. And the third category is debt ratio. So debt ratio indicates the level of indebtedness. That means how much the company has borrowed. Has the company borrowed too much or not? Now, what is the ability of the company to satisfy its financial obligations? Financial obligations ki eta hocche arthik বাধ্যবাধকতা. That means the requirement to pay cash. How capable the company is. Okay, so those ratios are called debt ratio. What are the different debt ratios? Number one, debt ratio itself. Okay, then debt to equity ratio, then times interest earned ratio, then fixed payment coverage ratio. These are under the category of debt ratio. The next category is profitability ratio. Profitability ratio. So profitability ratio actually measures the ability to make profit. Ability of the firm to make profit. There are different types of profitability ratio. Number one is gross profit margin, ability to generate gross profit. Then operating profit margin, ability to generate operating profit. Then net profit margin, ability to generate net profit margin. Net profit. Then earning per share, profit allocated for every share of stock. Then return on asset, how much profit is generated from the use of asset. Then return on equity, how much profit is generated from the owner's investment. Okay, then don't worry, are you thinking that we are completing all these things? No, we will explain one by one, don't worry. Then we will go for the last category, which is market ratio. So market ratio actually indicates the perception of the shareholders about the company, perception of the investors about the company. And you will see that in calculating the market ratio, we do not only depend on the balance sheet or income statement values. We also take information from the stock market, for example. What is the share price of the company? That is also another input. So what are the market ratios? Price earning ratio, market to book ratio, and and what? And book value per share to, yes, market to book ratio and price earning ratio. These two will be covered only here. Last টা হচ্ছে price earning ratio আর হচ্ছে market to book ratio. Okay. So these will be different types of ratios. So what will be your strategy for learning? Actually, in this textbook, you will find that the author of the textbook has calculated all the ratios for target corporation. So you will have to identify from where they have got the data for calculating different ratios. For example, for calculating total asset turnover, they need sales and total asset. So where should we get sales? From the income statement. Where should we get total asset? From the balance sheet. Very easy. So what you need to do, you need to memorize the formula. You need to memorize the formula of different ratios. Actually, you will not need to memorize. If you practice quite a lot, then you will not have to memorize the formula. Anyway, at first, you may need to remember the formulas. So if you know the formula, you know what are the items in the denominator, what are the items in the numerator. Uporetta holo numerator and nicherta holo ki denominator. So you have to know which one is what. Okay, and then you have to know what is the source of the numerator item and what is the source of the denominator item. For example, for calculating total asset turnover, you need sales divided by total asset. Okay, now you have to know what is the source of sales. That is income statement. What is the source of total asset? That is the balance sheet. Now you have to go to the balance sheet and find the amount of total asset. You have to go to the income statement and find the amount of sales revenue. Type the value or write the value here and then do the calculation. Very simple. Divide sales by total asset, you get the value. Okay. So this is number one task. Then number two, you have to know whether it should be, whether higher value of the ratio is better or lower value of the ratio is better. Okay, you have to know that. You have to understand that. No, you have to understand whether for a particular ratio, whether a higher value is better or lower value is better. If you know that, then you can compare over time and also compare with other company to conclude whether your company is performing better or worse. And based on that, number three, you can suggest. You can suggest, well, compared to the industry, our company has a lower total asset turnover ratio, so they have to try to improve it. Now, how can they improve it? You can suggest either they have to increase their sales, keeping the same level of asset, or they have to maintain the sales with a lower level of asset. Do you understand? So that can be your suggestion. So this is how you can actually do the ratio analysis. Okay, do you need a prayer break? For exactly 10 minutes, okay? At 8, is that okay? Okay, sorry, I forgot. Anyway, now let us talk about the liquidity ratio. So starting with the current ratio. Very simple. Current ratio is equals to current asset divided by current liability. Now, where do you get current asset? Balance sheet. Current liability? Balance sheet. Do all of you know that? Okay. If you do not know, no problem. Go to the textbook and see how they have calculated the current asset and current liabilities. They have taken current asset of 12,902. So let us see where we get this 12,000 figure for target corporation. So if we go upward, I'm confused, whether I'm using that computer or this computer. So if we go to the, remember these figures, 12,000 current asset and 14,000 current liabilities. Okay, tell me. So if you go to the balance sheet, you will see that current asset, total current asset, you see 12,902. And current liabilities, 14,487. So does it match? So this is how you have to read the textbook. Then you will remember, which is found where, which item is found where, in which financial statement. Yes. Current ratio. How to ask? So at first you have to know the formula, then you have to know the source. Now from where you can get the data. Now let us come to the next point. What is the next point? The next point is whether a higher value of current ratio is better or a lower value of current ratio is better. Okay, before that, before answering that, let us examine the formula more closely. Current ratio is equals to current asset over current liability. So ultimately the result will indicate for every dollar of current liability, how many dollars of current assets are there. Am I right or wrong? This is indicated by the ratio, isn't it? For every dollar of current liability, how many dollars of current assets are there? So why having more current assets is important? It can be important because if you do not have much amount of current asset, then probably you will not be able to repay the current liabilities in time, because for repaying the current liabilities you need cash, and cash is among the current assets. Not only that, accounts receivables can easily be converted into cash. When you collect the accounts receivable, it becomes cash. Not only that, inventories, particularly the finished good inventory, if you sell that, it can be converted into directly, as in some cases directly into cash, in some cases converted into accounts receivable first, then accounts receivable will be converted into cash. Are you understanding or not? তাই না? আমরা ইনভেন্টরি মানে কি, মানে হচ্ছে যেগুলো বিক্রির জন্য রেডি আছে। ইনভেন্টরি আবার কয়েক রকমের আছে। হ্যাঁ, so the final version of the inventory, which is finished good inventory. So if you have the finished good inventory, then you can sell it to the customer. If you sell it on cash, you will get the cash. Now you can use that for repaying your current liabilities. Accounts payable শোধ করা বা অন্যান্য মজুরি দেওয়া, বেতন দেওয়া ইত্যাদি ইত্যাদি. You can do that. Right? But there are some inventory, for example, work in process inventory. এখনো complete হয় নাই, incomplete. Let's say you have only made this portion. This is not made yet. So can you sell this one to the customers? No, you cannot sell it. So these inventories are not good, good asset, good current asset, for converting into cash. Anyway, so having sufficient current asset is important, but having too much current asset is not good, because if you have too much current asset compared to fixed asset, normally current assets are not productive. These are unproductive. If you think about the plant and machinery, those are very much productive assets. You can use the plants and machineries for producing more and more product. But if you have cash, that is totally unproductive. If you have accounts receivable, very unproductive, because it does not give you more cash. No, it cannot help you to produce. Okay, inventory itself is produced, so inventory cannot help you to produce more. So having too much current asset indicates that you have more unproductive assets. So basically, current assets should not be too high, current assets should not be too low. Same thing for liquidity, overall liquidity. A company should not have very high liquidity. It should also not have very low level of liquidity. It should have an optimum level of liquidity. Optimum level of liquidity. just as much as is needed. Okay, and the optimum level of liquidity depends on the industry. It depends on the industry. Different types of business organization may need different level of liquidity. Different level of liquidity. If we look at the previous example, okay, if you look here, we have current ratio, which indicates the liquidity of different industry. So you can see building materials industry on an average has 1.6 current ratio. Computers have 2.0 current ratio. Eating and drinking only 0.6, because normally when people eat, they pay instantly even before eating. Am I right or wrong? No, if you go to the restaurant, in some restaurants you pay after eating, and in many restaurants you pay even before eating. Am I right or wrong? Okay, so normally current yes, liability is very less, so they don't need that much liquidity. This is why they try to utilize the fund. They try to utilize the fund. Yes, cash flow বেশি এবং সেটা তারা খুব ইউজ করে, মানে সেটা টার্নওভার করছে বারবার। This is why they don't have much liquidity. But computer industry need liquidity because they have to purchase so many supplies, so many raw materials, so they need liquidity. They have to pay. They need very highly costly equipments and machineries, for which they have to borrow money and for which they have to pay installments or lease payment, whatever. For whatever reason, they need more liquidity. This is why computer industry has more liquidity. Eating and drinking has the least amount of liquidity. Merchandise stores has 1.3. That is above the eating and drinking, but below the computer and building materials industry. So to conclude whether the current ratio or quick ratio, whatever liquidity ratio of your company is good or not, you cannot simply say higher is better, or you cannot simply say lower is better. What you have to do, you have to compare with the industry average for liquidity ratio, not for all ratios. For the liquidity ratios, you have to compare with the industry average. Okay, so if you see that your ratio is below the industry average, then you can say we have to increase our liquidity, we have to increase our current ratio. If it is above the industry average, then you can suggest to decrease it. So same type of analysis for current ratio, but the formula is different. Quick ratio. The formula is different. In case of quick ratio, you are dividing by the same thing, current liabilities, but the numerator is not simply current asset. It is current asset minus inventory. You are excluding inventory from the current asset. Why? Because you think that inventory does not provide sufficient liquidity. Probably because your company has more inventory that cannot be easily converted into cash. এমন হইতে পারে যে আপনার কোম্পানিতে ইনভেন্টরির একটা বড় অংশ হচ্ছে আধা প্রস্তুত, মানে হলো সেমি ফিনিশড, এরকম হতে পারে। অথবা আপনার ইনভেন্টরি এগুলো আসলে ক্যাশে সহজে কনভার্ট হয় না, ক্রেডিট সেল হয় এবং সে অ্যাকাউন্টস রিসিভেবল অনেক দেরিতে কালেকশন হয়। সো ইনভেন্টরি ইজ নট গুড ফর ইয়োর কোম্পানি টু প্রোভাইড লিকুইডিটি। দিস ইজ ওয়াই probably for your company quick ratio will be better measure of liquidity. Okay, so in that case, from the current asset you deduct the inventory. That means current asset net of inventory is in the numerator, and in the denominator you have the same thing, current liability. So what is the interpretation of this ratio? For every dollar of current liabilities, how much current asset net of inventory is available? So tell me whether having a higher quick ratio better or lower quick ratio better? Higher or lower? Which one is better? Higher or lower? This one is also liquidity ratio, and for any kind of liquidity ratio, we have said that it should be at an optimum level. Not necessarily higher is better or lower is better. Okay, so how do we understand whether the quick ratio is good or not? You have to compare with the industry average. দেখবো ইন্ডাস্ট্রি এভারেজের কত, আমাদের কত। যদি ইন্ডাস্ট্রি এভারেজ থেকে বেশি হয় তাহলে বলবো যে আমাদেরটা too much, we have to decrease it. আর যদি দেখি ইন্ডাস্ট্রি এভারেজ থেকে কম, তাহলে আমরা বলবো we have to increase it. Have you got your answer? Okay. No. That is an example. If you calculate, for example, if you calculate it for Square Pharmaceuticals Limited in Bangladesh. So Square Pharmaceuticals Limited belongs to which industry? Pharmaceuticals industry. So you also have to calculate the ratio of all the pharmaceutical companies, then take the average of that and then compare with that. No. You have to calculate. Actually, we are not giving the instruction to do your assignment or final exam. We are just learning. You have to calculate. Unless a third party provides it for some price, I don't think it is available. Some websites may have that. I'm not sure if any website is giving that. Even if some organization provides it, you have to check the reliability, whether they have done it properly or not. Data reliability is very important. Definitely. আপনারা এক্সাম হল রেখে তারপর ইয়েতে যাবেন, বিভিন্ন ফার্মাসিউটিক্যালস কোম্পানিতে যাবেন। না এটা নিয়ে এক্সাম নিয়ে ভাবছেন কেন? এক্সামের জন্য দরকার হলে আপনার যা যা দরকার তথ্য ছিল দেয়া হবে, ডোন্ট ওয়ারি। Nobody is going to make give you an impractical question. Okay, so that is about the quick ratio. Actually, we are not going to discuss all the ratios completely, because if you understand the principle, you have to remember the formula. So I'm not going to tell you again and again. That is the same thing for all the ratio. Probably I'm going to tell you which ratio should be higher or which ratio should be lower, and also I'm going to tell you what is the source of different elements of the ratio. Okay, that is very important. So these two things are important, and then you can calculate the ratio. So let us talk about activity ratios. Actually, I will ask you to modify the list of the ratios given in the textbook. At first, you will learn how to calculate the inventory turnover ratio. TO for turnover, okay? TO for turnover ratio. Then you should know how to calculate accounts receivable. AR for accounts receivable. Okay, accounts receivable turnover ratio. Then you should know how to calculate accounts payable turnover ratio. And from the inventory turnover ratio, you can calculate average age of inventory. From the accounts receivable turnover, you can calculate average collection period. From the accounts payable turnover ratio, you can calculate average payment period. But unfortunately, in your textbook, these two ratios are not given, but you have to learn. Okay? In your textbook, you don't have the accounts receivable turnover and accounts payable turnover ratio, but you have to learn. You understand? Okay. So let's start with inventory turnover ratio. The inventory turnover ratio is, okay, let us look at the screen. The inventory turnover ratio is cost of goods sold divided by inventory. So where do you get the cost of goods sold? You get it from the income statement. Very easy. And where do you get the inventory? The balance sheet again. So you just pick it from there, pick the cost of goods sold from the income statement and pick the inventory from the balance sheet and do the division, you get the inventory turnover ratio. That is not difficult, but you have to be able to interpret this ratio. What does it mean? Actually, it is very important to recognize that balance sheet is like a snapshot of financial position of a company. Do you understand? Balance sheet is like a snapshot and income statement is like video film. Do you understand that or not? Actually, balance sheet provides you the different level of assets, liabilities, and owner's equity at a point of time. At a point of time. But income statement provides you the total of the whole accounting period. If it is year, then total of the whole year. For example, sales revenue of the whole year. Then cost of goods sold of the whole year. Interest expense of the whole year. Tax of the whole year. But in balance sheet, let's say cash of the moment when the balance sheet is prepared. Not of the whole year. Okay, accounts receivable. So accounts receivable at the point of time when the balance sheet is prepared. It does not show you what was the accounts receivable yesterday or day before yesterday or in the last month or during the whole year. Okay, so balance sheet provides you the idea of the level of different assets, liabilities, and owner's equity accounts. Okay, and income statement provides you the total of the whole year. So cost of goods sold, if we assume that all the cost of goods sold are actually from inventory, then cost of goods sold provides you the cost of the whole year, whereas inventory is the level that you normally find in the company. Let's say your cost of goods sold is 550. 550 is the cost of goods sold found in the income statement. Now, inventory in the balance sheet shows that your inventory is 55. So what does it mean? It means that normally you maintain $55 worth of inventory, but in the whole year, you have used $550 worth of inventory. So if you divide this one by this one, then you see that this $55 inventory turns over 10 times during the whole year. This is why 55 times 10 is equals to 550. $55 হচ্ছে কোনো এক সময়ের ব্যালেন্স শিটে পাওয়া গেছে এটা। তো ধরে নেওয়া হচ্ছে এটাই সব সময় ছিল মোরলেস এভারেজ আর কি, হ্যাঁ। তাহলে আমাদের সারা বছরে ইউজ হয়েছে 550। তাহলে যে কোনো সময় যত থাকে তার কত গুণ ইউজ হয়েছে সারা বছরে? 10 বার, 10 গুণ। তার মানে ইনভেন্টরির যে নরমাল লেভেল সেটা 10 বার ইউটিলাইজ হয়েছে সারা বছরে। It has been utilized 10 times in a year. This is why inventory turnover is 10 in this case. Cost of goods sold divided by inventory is 10. Do you get that or not? No, this is just an example. For an introductory course, you can use that as the denominator. But actually what you should do, you should take the inventory figure of the last year and inventory figure of this year balance sheet. And if possible, take more points during the year, maybe every 3-month inventory and get the average. That will give you more accurate result. But because this is your basic finance course, we are not going into that complexity. We're just saying that, well, we assume that the balance sheet level of inventory is the average level of it. What? Actually, the companies will have to prepare the financial statements every quarter, not only for inventory, for all other items. Maybe those will not be audited, but the corporations should prepare quarterly financial statements and also report that. Not only interturn, the corporations will have to publish it as well. Quarterly is also published. Yes, quarterly results are also published. Yes, that is right. Again, because this is a basic level course, we are not going into that complexity. We are assuming that we have only inventory. But in practice, if you do this ratio, you will have to find, how much of the cost of goods sold is the inventory. Then use that one in place of cost of goods sold. So don't worry about this. Just remember cost of goods sold divided by inventory. If you do your major in finance, then in financial statement analysis course, probably you will go into more detail. Okay? Any question? Okay, so inventory turnover. Now tell me, what should be the target inventory turnover ratio? Should it be higher or lower? Now, higher is better or lower is better? Because the more inventory turnover, the more times you utilize the inventory. The more cycle in a year, the more business you have. Right. Because from every turnover, you are doing one cycle of business. Do you understand? So the more the turnover, the better it is. Okay. Then let us talk about this one, average age of inventory. Okay. Now let's say we have got inventory turnover ratio 10. That means in a year the inventory is turning over 10 times. Now the question is, for every turn, how many days? How many days does every turn take? 365 divided by 10. So if you get this one, then getting this one is very easy. 365 divided by inventory turnover. 365 divided by inventory turnover if you are from this planet. Right or wrong? Because if you are interstellar citizen, then probably we have to think about how many days are there in your planet in a year. Okay. Take the fraction, no problem. Because all these measures are actually average measure. You will never get an accurate figure. All these are average. Even if you take the quarterly average of inventory, still it is not appropriate, right? If you take monthly, more appropriate, but not perfectly appropriate. Okay. Now, I'm going to talk about the remaining two, not much because it's almost the same thing. Accounts receivable turnover. How can you get accounts receivable turnover? Write down the formula. Accounts receivable turnover is equals to sales divided by accounts receivables. Sales divided by accounts receivable. This is not in your textbook. Okay, your textbook actually combines the both formula and they have given only the average collection period. But what I want you to do, you also calculate accounts receivable turnover, then divide the accounts receivable turnover, divide 365 days by the accounts receivable turnover. Okay, so accounts receivable turnover is equals to what? Sales revenue divided by accounts receivable. Now again, there is an assumption here. The assumption is all sales are credit sales because accounts receivable arises only from credit sales. You should know it. Okay, so the appropriate formula should be credit sales divided by average accounts receivable. But for this course, because this is a very beginner level course, let us forget about that. Let us assume that all sales are credit sales. Okay, so take the sales from the income statement and divide it by accounts receivable from the balance sheet, so that you get the accounts receivable turnover. For for this company, for target corporation, What will be the accounts receivable turnover? They have not given the accounts receivable turnover here. They have actually combined both the formula and directly calculated average collection period. But we can see the figures here. What is the total sales? 78,000 for 2020, 78,112 divided by 441. Can you calculate? 78,112 কে 441 দিয়ে ভাগ দেন তো কত আসে? 78,112 এটা হচ্ছে total sales of the year divided by 441. আচ্ছা 365 কে আবার এটা দিয়ে ভাগ করেন তাহলে দেখবেন 2.06 আসার কথা। কত আসছে? তাই let me check. 78,112 divided by 441 equals 177.12. So 365 divided by 177.12. 365 divided by how much? Point? 2.06. Okay. So instead of calculating the average collection period directly, better you calculate the accounts receivable turnover first, then divide 365 by the accounts receivable turnover, you will get the same result. But I want you to learn this ratio as well. Okay. Now, if we think about the accounts payable turnover ratio, how can you calculate the accounts payable turnover ratio? Write down the formula. Write down the formula. Purchase divided by accounts payable. Purchase divided by accounts payable. Purchase divided by accounts payable, right? Okay, now where do we get purchase? Actually, purchase is not available everywhere. It is not available directly in the financial statement. If we assume that all the cost of goods sold are actually inventory, then the cost of goods sold will be equal to purchase. But it is not practical to assume that. Cost of goods sold cannot entirely be from inventory. So it is reasonable to assume or find the percentage, okay, find the percentage of cost of goods sold that is purchased. And for this example, for this company, Target Corporation, based on the nature of the company, they have assumed that 90% of the cost of goods sold is purchased for this company. But for another company, it may be different. Okay, so if you are the internal person of the company, then you can easily collect the information. What was the annual purchase? But if you are external party, then probably you will have to get the idea what percentage of cost of goods sold is purchased. So you have to take that. So here they have taken the cost of goods sold times 90% because they know 90% of the cost of goods sold should be purchased for this type of company. Okay, so they get the purchase. Now purchase divided by accounts payable. Okay, they get accounts payable turnover, then divide 365 by accounts payable turnover, just like before. You get now tell me. Purchase money to purchase of inventory.
Cost of goods sold
সম্পর্ক হচ্ছে কস্ট অফ গুডস সোল্ড এর মধ্যে কি কি থাকে বলেন দেখি। না 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 সেটা তো সেলস রেভিনিউ। কস্ট অফ গুডস সোল মানে যেই হ্যাঁ তৈরি করতে কি কি লাগে, র ম্যাটেরিয়ালস লাগে আর কি লাগে, হ্যাঁ আচ্ছা ওইটা র ম্যাটেরিয়ালস এর মধ্যেই পড়বে, ওর মধ্যেই ধরা হয়। আর কি, লেবার, লেবার ম্যাটেরিয়াল ওভারহেড, তাই না? তার মানে ম্যাটেরিয়ালটা হলো পারচেস, তাহলে পারচেস তো 100% অফ কস্ট অফ গুডস সোল হতে পারে না। ইট শুড নট বি 100% অফ কস্ট অফ গুডস সোল, ইট শুড বি আ পোরশন অফ দ্য কস্ট অফ গুডস সোল। বোঝা গেল? তো সেই পোরশনটা জানতে হবে যে কত পার্সেন্ট। এটা আপনারা প্র্যাকটিক্যালি করার সময় জানবেন, কিন্তু আমাদের পড়াশোনার সময় তো জানা সম্ভব না, এটা হয়তো বা ধরে নিতে হবে। ঠিক আছে, বোঝা গেল? ইজ ইট ক্লিয়ার? ওকে, সো you know that the higher the inventory turnover, better. Higher the accounts receivable turnover, the better. Okay, and opposite, lower the average age of inventory, the better. Because if you can complete the inventory cycle quicker, it's better for your company. You can do it again and again. If your average collection period is lower, the better. Why? Because you are collecting the accounts receivable quicker, and that is better for you. No? But opposite is true for accounts payable. Accounts payable turnover should be as low as possible, and it should be as high as possible, average payment period, because the late you pay to your supplier without negatively affecting your credibility, the better for your company, because you can utilize other people's money in your business. Do you understand? So now another activity ratio, that is total asset turnover. Total asset turnover. Total asset turnover is equals to sales divided by total asset. So sales is available from where? From where? Very good. Income statement. And total asset from? Balance sheet. Okay. So you just calculate, you can calculate it. I have already given the example of total asset turnover. So in this case, for target corporation, the sales is 78,122 divided by 42,779. Okay, so it indicates from every dollar of asset, how many dollar of sale is generated. For target corporation in 2020, they have generated $1.83. From every dollar, $1 of asset, they have generated $1.83 of sales. Now, should it be higher or lower? The more sales you generate, the better. Very simple. Okay, it should be as high as possible. Now, debt ratio. Debt ratio is very simple. You can just collect the total liability from the balance sheet and total asset and divide total liabilities by total asset. So it indicates for every dollar of asset, how many dollar of liability is used, because you know asset is utilization of fund. Am I right or wrong? And asset is utilization of fund, and there are two sources of fund. One is liability, another one is equity. So this ratio is indicating for buying asset, how many dollar, for buying every dollar of asset, how many dollar has come from liability. প্রতি টাকার অ্যাসেট কেনার জন্য কত টাকা কোথা থেকে আসছে? লায়াবিলিটি থেকে আসছে, ধার করা টাকা আসছে। Current ratio is different, current asset versus current liability, but this is for all the assets and all the liabilities. Do you understand? So for every dollar of all the assets, how many dollars have come from creditors? How many dollars have come from liabilities? Okay, should it be high, very high? Should it be very low? Actually not. It should be at optimum level, because borrowing is not bad. Borrowing is good, because if you borrow from someone, you only have to pay a fixed amount, and if you can do very good business, the additional portion of the profit will go to the owner. Do you understand? So that is the good side of borrowing. There is another good side. If you borrow more, you have interest expense. That means instead of taking money from another owner, if you take it from bank, for example, then what do? after making profit from that money, you pay only a fixed portion to the lender. But if you otherwise take it from the owner, you have to share the full profit, share the entire amount of profit proportionately. কোন পার্টটা? যদি আমরা ধরা যাক আমার 100 টাকা দরকার ব্যবসা, নতুন একটা ব্যবসা করার জন্য, ওই 100 টাকা আমি কি করতে পারি? আমরা ধার করতে পারি, অথবা আমরা কি করতে পারি? আরেকজন ওনার পার্টনার নিয়ে তার কাছ থেকে নিতে পারি। তো পার্টনারের কাছ থেকে নিলে কি হবে? ওই 100 টাকা যদি 20 টাকা প্রফিট করি, ওই 20 টাকার শেয়ার তাকে দিতে হবে পুরোটাই। 20 টাকা পুরোটাই দিতে হবে না, ওই 100 টাকার উপরে যেহেতু হয়েছে। আর যদি আমি 10% রেটে ধার করি, তাহলে কি করতে হবে? ব্যাংকে দিতে হবে 10 টাকা, আর 10 টাকা আগের ওনাররা তারা পাবে। তাহলে কোনটা ভালো হলো? বড় করা ভালো হলো না? There is another good side of borrowing. If you borrow more, then you will have interest expense on the borrowing. That will reduce your taxable profit and reduce your tax. But instead, if you take the same money from the owner, you cannot deduct the dividend in the income statement. If you give the profit to the shareholder, you cannot show it in the income statement as expense. So it will not reduce your taxable income. So borrowing has two advantages. Number one is what I have already told you, and another one is tax benefit. So this is why borrowing more is good. It is not bad for business. But too much borrowing is bad, because in case you are not ending up with good profit, if you end up with loss, the borrowers are not going to forgive you. They will take their money. You may have to sell your existing asset to repay them. Do you understand? But in case of equity, in case of shareholders investment, it is not like that. If you don't make profit, you don't pay anything. So borrowing should be at an optimum level, not too high, not too low. So how to understand what is the appropriate optimum level? Calculate the industry average and compare with that. Okay, so debt ratio, you have to calculation is very easy, and identifying whether it is good or bad, for identifying that you have to compare it with what? With the industry average debt ratio. Yes. না, সমস্যার কিছু নাই, কিন্তু তারা যদি কিছু পরিমাণ বড় করে সেখান থেকে এই বেনিফিট গুলো পেত, তো তারা যদি বেনিফিট না চায়, then it's fine, no problem with that. There are many companies, who has a strategy of not borrowing the minimum. অনেক কোম্পানি আছে যারা, এবং ইনফ্যাক্ট এটা দেখা গেছে যে আমাদের বাংলাদেশে যেসব ফ্যামিলি বিজনেস সাকসেসফুল হয়েছে, তাদের কিন্তু হিস্ট্রি আছে কম বড় করা। They do not borrow, initially they did not borrow much. Do you understand? At the initial stage, they did not borrow much. And this is particularly in our country. I don't know about other countries, but I have seen one research where it is found that the successful family businesses in Bangladesh, they did not rely much on borrowing. That is different story, entrepreneurial issues. Probably borrowing will also increase the stress during the initial level of business, which is not good. So that is a matter of debate. But for corporation or for any kind of company, actually having some borrowing is good for the business, but it should not be too much. Now you have to find out what is the appropriate level. For finding that, you have to find the industry average. Clear? So another ratio, it serves the same type of purpose, debt to equity ratio. So in debt ratio, we compare total liability with total asset, right? We compare total liability with total asset. But in debt to equity ratio, we compare total liability with total equity. So same thing here, you have to compare with the industry average. The ratio should not be too high, should not be too low. Yeah, owner's equity. You get both liabilities and owner's equity from the balance sheet. Okay, now this one is a bit different. Times interest earned ratio. Times interest earned ratio is equals to earning before interest and taxes divided by interest. So where do you get interest expense? You get it from the income statement. And where do you get earning before interest and taxes? Also from the income statement. Actually, this is the operating profit. operating profit, and we have not deducted the interest expense yet. We have not deducted the tax yet.
Okay.
Yeah, before tax and before interest. Profit before tax and before interest. So why do we calculate this ratio? To see for covering, because if you want to pay interest, you have to pay it from earning before interest and taxes. ইন্টারেস্ট দেওয়ার আগে যে প্রফিট আছে সেখান থেকে তো ইন্টারেস্ট দিতে হবে, ইন্টারেস্ট দেওয়ার পরে যেটা সেটা থেকে তো আর দিব না। সো ইফ ইউ ডু নট হ্যাভ সাফিসিয়েন্ট আর্নিং বিফোর ইন্টারেস্ট, হাউ ক্যান ইউ পে ইন্টারেস্ট? ওকে, so this ratio indicates for paying every dollar of interest how much earning before interest and taxes you have. Okay, and you can calculate it very easily from the figures from the income statement. And can you tell me whether a higher value of this one is better or lower value of this one is better? Actually, from the creditor's perspective, those who have given loan, from their perspective, higher value is better. But from company perspective, in my opinion, it should be at optimum level. It should be at optimum level. That means close to the industry average. Okay, so in this ratio, only interest is considered in the ratio, but there are some other financial obligations also. What are the financial obligations? For example, principal repayment. For example, you have taken loan for 10 years. Okay, now already 9.5 years has passed. So what you have to do? You have to repay the principal within 6-month period. 10 বছরের লোন নিয়েছেন, 9.5 বছর চলে গেছে, আর 6 মাসের মধ্যে এটা রিপে করে দিতে হবে। তাহলে এটা কি, যদিও এটা হচ্ছে লং টার্ম লোন, কিন্তু আমাদের ইমিডিয়েটলি 1 বছরের কম সময়ের মধ্যে পে করতে হবে। সো বিকজ ইউ হ্যাভ টু রিপে দ্য প্রিন্সিপাল উইদিন 6 months or 7 months, that means less than 1 year period. So it has become a current obligation. So you should also consider that in your calculation. But in this ratio, it is not considered. You have only considered interest. You have not considered the current portion of your long-term debt that should be paid within very short period of time. Another thing is preferred dividend. We have not discussed preferred stock yet, but preferred dividend is also another financial obligation. You must pay dividend to the preferred shareholders. That should also be considered. Another one is lease payment. নাই থাকতেই পারে, ঠিক আছে, যে কোনো সময় আসতেই পারে। Okay, yes, we will discuss that in another topic. So for covering all this thing, we have a very big formula that is a better indicator than times interest earned ratio. Times, it is same type of ratio, but it is a better indication because we cover lease payment, which is obligation. You have to pay rent, you have to pay lease payment, then you have to pay principal that is due within very short period of time. You have to pay preferred dividend. So all these things are incorporated in this ratio, which is called fixed payment coverage ratio. So this one is interest coverage ratio, or times interest earned ratio. That means it only covers your ability to pay interest. But fixed payment coverage ratio covers your ability to every fixed payment. So what are the fixed payment? Number 1, interest. Number 2, principal that you have to repay very soon. Number 3, preferred dividend. Number 4, lease payment. All these are included in this ratio. So the higher fixed payment coverage ratio indicates that you have the ability to meet all the fixed financial obligation, and the lower value indicates you have less ability. Yes. Actually, I'm not going to interpret the detail of the ratio, but there is reason. There is reason actually. Okay, we can discuss that later. Now I'm not going to focus on this one. Not only that, we also have some tax adjustment, some other things. Okay, maybe we can discuss that in the next class. Today I want to finish all the ratio first. Oh, already. Okay, after the break we will discuss profitability ratio and market ratio, and we will have our quiz also, right? So see you after the break. Okay. So now we are going to discuss about the profitability ratios, right? So profitability ratio, actually we have several profitability ratios. One is the gross profit margin. The formula is actually gross profit divided by sales. Now, how do we get the gross profit? You know from your accounting knowledge that it is sales minus cost of goods sold. So straightforward, for every from every dollar of sales, how much or how many dollars of gross profit you can generate. That is the interpretation of the ratio, and you can understand that the more gross profit we can generate, the better it is. So gross profit ratio should be lower or higher. What is your name? Abdullah. Okay, very nice name. So Abdullah, it should be higher, because higher gross profit margin indicates that your company is able to generate higher gross profit from every dollar of sales. Do you understand? So very simple. And same for the operating profit. Same for the operating profit margin. Okay, in case of operating profit margin, operating profit divided by sales. You know what is operating profit, right? Operating profit is basically sales minus cost of goods sold, then you get gross profit. And from the gross profit, you deduct selling expenses, administrative expenses, and some other expenses. Only two things are not deducted: the interest expense and taxes. So earning before interest and tax is basically the operating profit. So if you divide the operating profit by sales, what does it indicate? It indicates from every dollar of sales, how many dollar of operating profits are you generating. So the lower the operating profit margin, the better, isn't it? Higher or lower? Higher, the better. Okay, the high the operating profit margin, the higher the operating profit margin, the better it is. So you can calculate it very easily. From where do you get the operating profit? From the income statement. And from where do you get the sales? Again, from the income statement. Okay. Then again, let us go to net profit margin. You understand what it is, right? Just like gross profit over sales, operating profit over sales. Now net profit margin is net profit over sales. But sometimes net profit has different name. Some people say net income. Some people say earning available to common shareholder. So whatever, if you do not have any preferred stock, in Bangladesh, we do not have any preferred stock right now. So I'm not sure if we have one or two. Anyway, so if you want to calculate the net profit margin, you have to take the earning available for common shareholder. That means the net income is usually only available for the common shareholder. So net income divided by sales, you get the net profit margin. Okay. So where do you get the earning available for common shareholder or net income? From the income statement, the bottom portion of the income statement. And where do you get the sales? Again, from the income statement. So what do you think? The higher net profit margin is better, or the lower net profit margin is better? Higher net profit margin is better. Okay. Now earning per share. This is a little bit different. So again, earning per share is equals to net income or earning available for common shareholder. If you don't have preferred stock, then same thing. Net income or earning available for common shareholder. So this is the total earning available for common shareholder divided by number of common stock. So what does it indicate? It indicates the profit for every share. That is called earning per share. Not value, number of share. একটা কোম্পানির মালিকানাকে যদি 1 লক্ষ ভাগে ভাগ করা হয়, তার মানে তার 1 লক্ষ শেয়ার আছে। তাহলে 1 লক্ষ নাম্বার অফ শেয়ার দিয়ে ভাগ করতে হবে কাকে? Net income. So if you divide net income by the total number of outstanding share, then you get how much net income can be allocated for every share. Outstanding is actually a company may get approval for issuing, let's say, 20 million shares, but they have not issued all right now. Maybe they have issued only 15 million. So you will have to take that one. the shares that are being held by the shareholders. Some shares might not been not dividend, net income, because it is just net income. It doesn't mean that shareholder will get the entire amount of earning per share. So this is the income could be claimed against every share. That could be claimed against every share. But even if the shareholder wants to take all the income, not necessarily management will allow. Management will decide how much, what portion of the income will be distributed as dividend. That is an issue that we'll discuss later. Then return on total asset. So return on total asset is again net income divided by total asset. Net income or earning available for common shareholder divided by total asset. So what does it indicate? It indicates from every dollar of asset, how much earning does the company have? From every dollar of asset, how many dollars of net income the company can generate? Okay, from every dollar of asset. So see the difference between net profit margin and return on asset. In case of net profit margin, we calculate from every dollar of sales, how many dollar of net income. But here, it is from every dollar of asset, how many dollar of net income. Do you understand? বুঝা গেল নাকি না? নেট প্রফিট মার্জিনে আমরা কি দেখি? 1 টাকা বিক্রির 1 টাকা থেকে 1 টাকার থেকে কত টাকা নেট প্রফিট হলো, তাই না? আর এখানে দেখছি কি বিক্রির 1 টাকা না, এখানে দেখছি অ্যাসেটের 1 টাকা। প্রতি টাকা অ্যাসেট থেকে কত টাকা নেট প্রফিট করতে। Actually, net profit belongs to the common shareholder. Do you understand? Net profit belongs to the common shareholder. So sometimes it is called earning available for common stock. Now you can calculate similar ratio. Instead of total asset, you can use total equity. Total equity. So what does total equity mean? Total equity means the total number of dollars invested by the owners. Am I right or wrong? So in that case, the interpretation will be from every dollar of owner's money, how many dollars of net income the company generates. So in all these cases, the higher the ratio, the better. In all these cases, the higher the ratio, the better. Hello? Okay, so you understood what is ROA, what is ROE. ROA is return on asset, ROE is return on equity, and a net profit margin is return on sales, actually, if you want to say in the same manner, but actually it is net profit margin. Then what else? We have market ratio. So number one market ratio is price earnings ratio. So price earning ratio is market price per share divided by earning per share. We have already calculated earning per share, right? Earning per share means dollar of net income for every share, and market price per share is the price of every share. So what does it indicate? It indicates the number of dollar the shareholders are willing to pay for every dollar of earning per share. প্রতি টাকা আর্নিং পার শেয়ারের জন্য, আর্নিং পার শেয়ার কি? একটা শেয়ারে কত টাকা নেট ইনকাম, তাই তো? তাই কি না? আর্নিং পার শেয়ার মানে হলো একটা শেয়ারে, প্রতি শেয়ারে কত টাকা প্রফিট, ইপিএস যেটাকে বলছি, আর্নিং পার শেয়ার। ওকে, সো প্রাইস আর্নিং রেশিও ইন্ডিকেটস ফর এভরি ডলার অফ আর্নিং পার শেয়ার হাউ মাচ প্রাইস দ্য ইনভেস্টর্স আর উইলিং টু পে, তাই না? 1 টাকা প্রফিট মানে আর্নিং পার শেয়ার তো বেসিক্যালি প্রফিট, প্রতি শেয়ারে প্রফিট। আর প্রাইস পার শেয়ার হচ্ছে প্রতি শেয়ারের মার্কেটের দাম। তাহলে দুই জায়গায় পার শেয়ার, রাইট? তার মানে আলটিমেটলি কি দাঁড়াচ্ছে, শেয়ার কেটে যাচ্ছে। হ্যাঁ, তাহলে কি দাঁড়াচ্ছে আলটিমেটলি? ইট ইজ for every dollar of earnings or profit, how many dollars the shareholders are willing to pay for the share of the company. So should it be higher or lower? Actually, it depends. Price earning ratio. Yeah, good for the company. But sometimes remember, market price is not from the balance sheet or income statement. Market price is from the market. Do you understand? So the problem is, in the market, the price is determined by the force of demand and supply, and demand and supply is generated based on the decision by the investors. So investors are often biased due to their psychological traits. Sometimes unnecessary demands are there, sometimes unnecessary supplies are there, and that may lead to a price which is not appropriate. Okay, so too high price earning ratio may indicate inappropriate price, or too low price earning ratio may also indicate that the market is not functioning properly. Okay, that can be an indication, but not necessarily always. You have to cross match with other findings. Do you understand? When the stock market is booming, very high, people are running after shares. At that time, normally price earning ratio will be very high, but it does not justify the true future prospect of the company. Do you understand? So price earning ratio alone should not be used for making decision. You should also match it with the market condition, current market condition. Is the market functioning well or not? Okay, and what is the industry price earning ratio? You should compare with that. If you find that it is abnormally different from the industry price earning ratio, there must be reason for that. Why the price earning ratio is too high compared to other companies in the same industry? Does this company have something something very unique? If not, then you must think probably the market is manipulated or whatever. Okay, so anyway, price earning ratio is a very important indication, normally used by the stock market investors. Okay, then what else? Market to book ratio. That means market price per share divided by book value per share. So market price per share, you understand, the price in the market. But what is book value per share? Book value per share is the common equity value in the balance sheet divided by number of shares outstanding. So the value of every share in the accounting book, that is book value per share. And market price per share is the value of price in the share market, stock market. So the price of every share in the stock market is usually greater than the book value, because book value represents the value at the time of issuance. Okay, but over time the company grows, the company get more future prospect, so there is a goodwill in the market, and there is a growth prospect in the market that is reflected in the market price of the share. ওইটা থাকে হলো বুকে, মানে ওটা থাকে হলো আমাদের ব্যালেন্স শিটে, কিন্তু এখন মার্কেটে প্রাইস কত, তো সেটা বুক ভ্যালুর তুলনায় কত গুণ, সেটা হচ্ছে মার্কেট টু বুক রেশিও। ঠিক আছে? Again, same thing, market price depends on the condition of the market, so you have to cross match it with other conditions. Okay, so that's all about all the ratios. Now what I'm going to do, I'm going to discuss about our assignment. Can you see the screen? Yeah. So if you go to the ELMS or LMS, you will find that a company has already been assigned against your name. For example, Naima Akhtar has got the company called Far East Knitting and Dyeing Industries Limited. Okay. Mohammad Safwan Hussain has got the company Desh Garments Limited. Then Shahara Jaman Jui has got the company Pharma Aids. So each of you have got one company against your name. You understand? So what do you have to do with this company? Okay. Actually, you will have to do ratio analysis, financial statement analysis, and that is an individual assignment. So what you have to do, you have to go to the Dhaka Stock Exchange website. You can go to home and find, for example, let's say Beximco, Square Pharmaceuticals have been assigned under your name. Okay, so what you will do, you will go to the listed companies or securities and find the page for this company. Let's say Square Pharma, right? Here is Square Pharma. If you click, you will get some basic information, but our focus is to get the website of the company. Okay. So you can go to the website of the company, or you can Google and find the website. That is also okay. Okay. So if you get the website of the company, then you will find that the company has published its annual report, not the quarterly statement, not the balance sheet, income statement, financial statement. It should be the full annual report. Do you understand? The full annual report is available somewhere in the website. Not all company maintains the website very well. You may face some problem. If you have any problem, you can consult me anytime. Did I already assign you this task? Oh, you have already, okay, no problem. So you can see under investor relation, we have got annual report here. So find the latest 2 annual reports. Latest 2, the latest one and the immediate latest one, the second latest one. Okay, download these two. Download these two because you will need that for your analysis. Then what you need to do, you need to right click and copy the link. Okay, copy the link and then go to ELMS and submit the link here. Okay, because I'm not a student, I'm not getting the opportunity to submit. So if you go there, you will find a text box where you will paste the link of the two annual reports, latest 2 annual reports. So you are supposed to submit 2 links, one link for the latest annual report, another link for the second latest annual report. Okay. If you fail to get the link from here, what you can do, you can download it and upload in the Google Drive and also share the Google Drive link. But make sure that you give necessary access so that after clicking, I can immediately find it. Do you understand? Do not submit the because normally the annual reports are very big files, so you don't have to submit the whole report. Do you understand? Only submit the link to the annual report. That is your first task. After that, you will download this Excel file. You will download this Excel file. And I have already given you a video here. If you click here, you will find a video. So follow the instruction in the video and fill in this Excel file. This is just a template. So what you will do, you will type your program MBA, course code FIN602, course name Managerial Finance, section A, your name, your UIU ID number, and your assigned company. Okay, then go to the next worksheet and then type. Oh, you cannot see it? Sorry. Okay, here is the worksheet. Okay, so this is the first worksheet. Here you will write down all the details, including the company, assigned company name. Then you will go to the next worksheet. Okay, so you have 20 inputs that will be needed to complete from the annual report. Okay, in the annual report, you will find financial statements. So go there and find the current asset from the balance sheet. Find the current liabilities from the balance sheet. So BS means balance sheet. Okay, I have already given you the hints of where you can get it. Cost of goods sold from the income statement, sales from the income statement, accounts receivable from the balance sheet. Now, percentage purchase as a percentage of cost of goods sold. This is not directly available. So you have to come up with an assumption. So the assumption is not very difficult. Now, in the balance sheet and income statement, you will find notes. Okay, if you watch the video that I have already given here, okay, you will see you will see I have shown where you can find the notes and all these things. So if you go to the notes, you will find the structure of the cost of goods sold, and from that structure, you can actually come up with an approximate percentage. What should be the percentage of cost of goods sold? As purchase should be what percentage of cost of goods sold. Okay, and most of them are available from the notes section, but market price per common share, that is not available in the annual report, probably not available in the annual report. Okay, so what you can do, you have to look at the date of the balance sheet and find the share price on that date. Let's say the balance sheet date is 30th June 2022. So what you need to do, you need to find the share price of that company on that date. Yeah, it can be from DSC, it can be from many other websites provide share price data like Lanka Bangla or investing.com. There are so many websites that will provide you the historical share price data. Remember, sometimes June 30 or December 31st is a weekend. So in that case, you take immediate previous day share price. Okay? So do it for 3 years. Get the data for immediate last 3 years. So sometimes you can also get 2023 financial statements. So in that case, it will be 21, 22, 23. If you no gap, 20, 21, 22. If you download immediate 2 annual reports, normally you will get 3 years of data. 2 years from the immediate one, latest one, and the second latest and the third latest one from the previous annual report. Okay? For any problem, just talk to me or you can contact me during my office hour. No, not yet. Only type in the data. Type in the values. Yes, I will give you another link before the next class. So just submit there. So the last date is next class. Okay. So the annual report link must be submitted by tomorrow. Do you understand? Yes. You can see the deadline. Monday 12 June 11:59 PM. কালকে রাত 12টার মধ্যে এই যে অ্যানুয়াল রিপোর্টের এটা 15 মিনিটের কাজ। তবে অনেকে পাবে না, অনেক কোম্পানিতে পাওয়া যাবে না। ইফ ইউ ডু নট ফাইন্ড you just call me. ঠিক আছে? একটু কষ্ট করতে হবে কারণ সব ওয়েবসাইট কিন্তু একই ভাবে দেয় না। অনেকে আছে ওরা ওয়েবসাইট নিয়ে কনসার্ন না। হ্যাঁ? এটা আমি যদি 50 দিনও বাড়াই সবাই 49তম দিনেই কাজটা করবে। সো অফিসে বসে বসেই করা যায়। অফিস থেকে এসে 15 থেকে 20 মিনিট সময় লাগতে পারে, বড় বেশি সময় লাগে। If you fail, then call me. যে আমি পারছি না। Try first. Okay? Clear to you? Okay. So the discussion is over now.